The stock market took an absolute turn for the worse, and Riz and I are going to discuss what's going on. Good evening, my fellow Riz Elite members and all of our subscribers on YouTube. Welcome to this week's Elite webinar. Now, if you haven't done so, do me a solid and get down there and hit that like and subscribe button, because you're not going to want to miss anything coming up, because this market is, we're just getting going here because we had an absolute massive sell-off this week. And we definitely had some things that kind of propelled that down, but thankfully we've got the man himself, Riz, here tonight. Riz, how you doing?
Doing good, Chris. Yourself?
I am doing great. I'm so glad to be here, and I'm so glad that all of our members are here with us. It's great to have everybody on the webinar. But man, Riz, we have seen nothing but red all week. And I mean, it was 5 days of straight red candles. Now, what in the world is going on here? We've breached my line.
Yeah. Simply put, the market's now kind of pricing out some of the rate cuts that it had priced in. You could see that it didn't happen right after uh, you know, uh Powell talk. It took a little bit of time. But you're right, the entire week sell off, it was brutal, especially I believe, was it Monday? Yeah, Monday, I think, the 15th. And then continued lower and lower, and of course Friday was quite bearish as well. Uh, Importantly, we breached below the 50-day moving average and that stellar trend line that you have in the teal color there. For those that have not been following along on the webinar weekly, we have done a strong breach, and not to mention that 5,000 level. I mentioned the 5,000 level literally a week ago when I was last on. I said keep an eye on the 5,000 area. We could definitely see that. Not only did we see that, we broke quite a bit below it, which not surprising, right? The moment you get a break of a key level like that, um, it's definitely bearish. Now, with that said, you could see how the RSI is also getting a little bit oversold, just getting there, not there quite yet, but just about. And not only that, we are now in full swing of earnings season, so we'll touch on that as well. But ultimately, very, very bearish week, as you said, and not at all unexpected. For those of us that are paying attention in Elite, and even on the webinars, I've been calling for some bearish price action. We know that the rate cuts, so to speak, are pretty much non-existent. They're all fairy dust so far, in the figment of people's imagination. But the powers may be those on CNBC, on Bloomberg, all these analysts and all these talking heads. So-called experts, they're all thinking, probably sometime in June, maybe the first rate cut. Uh, I would probably say it's a little too early to discern that, because inflation has been holding firm. I'm not going to say it's gone up to 4% or something, because it hasn't, but generally speaking, it's holding that 3%, 3.1% area, which the Fed doesn't like. No one likes that. We want to get back to that 2% area. I don't think we'll ever see that this year. And the only way we can see that is even remotely have a chance of seeing 2.5, even below 3, is if interest rates stay around this level. They don't have to stay exactly where they are, maybe a couple cuts of 25 basis points each. And I think that should be more than enough, in my opinion, to keep the economy continuing, but take off a little bit of that extra froth.
Yeah, I mean, it's definitely a tricky situation that the Fed is in right now because, I mean, if you cut rates too fast, inflation starts coming back. If you don't cut rates, you're just going to be continuing to push that market lower and lower because people are kind of expecting that at this point. We were living in the time of, easy money and, close to 0% interest rates. And, that time is over.
Yeah, definitely in a higher rate environment. I would say this is more of a normal rate environment, neutral rate environment. Some people over the last 10 years that were just growing up, and they haven't been I would say, let's say millennials and younger, I would say, have not seen normal rates. Let's face it, normal rates are not 1%, 2% benchmark rates. They're not normal. That's not norm. After inflation, it's literally the real rate of interest was actually negative for a couple of years there. So this is more so normal, and I think it's because of the decade, maybe a decade and a half, 15 years. Ever since 2008, I feel like everything just turned upside down, and the central banks and all these hacks just literally just kept things way too low for too long, and it built the system up so horrendously bloated. It's ridiculous. Like the amount of cheap money, the amount of exuberance, the amount of speculation. Like it's crazy. It's crazy. And this is why it's taken so long to normalize. This is why we've got uh inflation sapping the buying power year after year for people. It's brutal. Like and I don't think it's gonna ease up. I mean, think of it this way. A lot of people think inflation, oh, it's high. Oh, it's not as bad. It's not as bad, but remember, inflation's still there. If it's 2%, which is a healthy level for a regular economy, I would say that's decent. But when you have something like 9% that we had in 2021, maybe even in 6% into 2022, and so on and so forth, I feel like that destroyed the buying power for so many people. And guess what? The way inflation works is they don't really go down. Prices don't go down. Like think back in history. I know I'm going a little bit long here, but if you look at the price of almost anything, whether it's groceries, whether it's gasoline, whether it's houses, yeah, they dip, ebb and flow, and housing is a little bit separate. But let's say electronics, anything, prices usually go up, barring a few things. Generally, they continue to go up. Why? Because the value of your money is decreasing. That's what inflation is every year. Obviously, we want it to be 2%, no more, because well, that means you're in trouble. Many economies in history, for those that are history buffs, a lot of the historical economies, the historical superpowers of the past, um, have crumbled partly because of their actual currency losing a significant amount of value very fast. It's just really a precursor to the downfall of an empire.
Well, back in my day, Sonny, we only paid a nickel for a candy bar, and I ain't paying any more than that. Trust me, I know the feeling on that. I remember when I was growing up, gas being around 99 cents a gallon. The lowest I ever paid was 89 cents a gallon. I don't think we're ever going to see prices like that again. So definitely something to keep in mind. All right, let's take a look here at the breakdown for the S&P 500 and see what in the world is going on, because we've got some major shifts going on here in the market sectors. Now, I haven't said this in a long time. I think was it 2022? The last time we saw the energy sector this high and being the number one dog in the S&P 500, but that's where we're at. Even with this dip here, energy's still the top dog, outperforming communications at this point too for year to date. And financials making a nice little comeback here, but what is suffering the most? That is tech. Tech is getting absolutely wrecked here now, currently underperforming the S&P 500, up only 2.72% on the year, while the S&P 500 itself is looking at right around 4.9% on the year so far. But we have some other people, rising stars. I remember back at the beginning of the year, Riz was talking about, hey, let's keep an eye on the utility sector. And look at this. Utilities making a great comeback here this week, making a big push. Healthcare really just kind of hanging out here right around the zero line, while we've got consumer discretionary definitely taking a dip here with the market, and real estate just in the dumpster at this point. But yeah, Riz, some major shifts in the indices this week.
Yeah, absolutely. You're absolutely right. The utility is getting a nice big jump, more than I expected. Um, but yeah, the energies sector continuing to outperform. Yeah, it took a little bit of a dip as well with everything else, but the fact that it's where it's at, and compare that to something like tech, which is the darling, obviously getting absolutely hammered, right? And underperforming. In fact, it's crazy because it was just probably a month ago we were looking at the market. The SPY was up about, I think, like 8% or something on the year, and here we are, below 5%. Um, like that's a big change, right, in a span of a month and a bit.
It really is, and it kind of showed you how much, we were holding on to tech, and now that's starting to go down, and we're starting to see some, some changes here. I think that is definitely going to be kind of the name of the game for the rest of the year, but we'll have to wait and see. Obviously, a lot can happen between now and December. But let's take a quick look here at the asset classes. Now, we were talking about oil last week, making a very nice bull run here, but looking like we're starting to, stutter a little bit. We were consolidating, hanging out right around this 85.40 area that we had marked previously. And then we had a nice big dip coming into the end of the week. Looks like we closed $82.22 per barrel for light crude. But one thing that is not dipping is gold. Gold is still going absolutely parabolic. And yeah, this is just ridiculous. I am surprised. We came really close to 2,400. I think we touched it intraday, if I'm not mistaken, and then dipped back down. But man, quite a disparity. I mean, oil looking normal, I would say. This is a fairly, reasonable move. This is not a reasonable move for gold, if you ask me.
Yeah, definitely signaling something, right? As I've said,
Yep.
continues to hold. At this rate, you know, I don't think we're going to see gold at the 2000 level anytime soon. I think this is we could see a little bit of a dip, a little bit of a selling, especially when it comes to CTAs, commodity traders, kind of maybe uh, you know, going back and forth with their positions and maybe selling, taking some gains. But as we head into the summer and Q2, but other than that, I think we've cleared that 2000 threshold, and yeah, the market's clearly signaling something. Like I've said last time as well, we've got different signals coming in from different markets. The bond market saying something, the equities markets obviously pulled back this past week, but the gold market saying something, commodities, and then we have this whole geopolitical stuff. It's an election year. There's so many different caveats and like variables this year. It's like, and so far, I think it's the volatility and the just the flux in price movements in different stocks and equities is going to be, I think, just getting started as we head into summer.
Oh, for sure. It is definitely going to be a volatile year. And as they said on Jurassic Park, hold on to your butts. All right, let's take a look here. Riz alluded to the bond market. Let's take a look at those bond yields, shall we? And we are still seeing that inverted yield curves at this point, with the 2 years still performing incredibly well, coming really close to that 5% yield. Gosh, we are just sitting right on it at a 4.988% yield on a 2 year, government bond at this point. And yeah, we're seeing that closely followed behind here with the 30 years, and then the 10 years are absolutely underperforming the other two. So, as we've kind of alluded to before, with the bond market, really, kind of acknowledging the fact that, yeah, we're not going to see rate cuts here until at least the second half of the year. I don't think there's any way we're going to see it before then. In the next 2 months for sure. And that's kind of scary to say that we're only 2 months away from halfway through the year. But the dollar here looking pretty strong, making a very nice move, over the last couple of weeks, making a big push up towards this 106 area, doing a little bit of consolidation this week, kind of holding that zone. But we're right over here, kind of where we were in, October and the tail end of September last year. So the dollar looking very strong, and the bond market definitely agreeing that, yeah, rate cuts are not coming anytime soon.
Yeah, I absolutely agree. In all accounts, what the U.S. dollar is doing is also quite extraordinary, and I don't see that weakness come back in anytime soon. If rates hold throughout the summer, maybe into the summer months, I think the U.S. dollar continue to stay strong.
Yeah, I mean, definitely we've got a lot of, as you alluded to, a lot of uncertainty right now in the world, a lot of stuff going on the geopolitical stage. And whether you like it or not, the US dollar is still the world reserve currency. And when in times of strife, people will typically flock to that reserve currency for its strength. And I think we're starting to see that here a little bit. I could be wrong on that, but based on everything we've had going on this month, it would make sense that people would start pushing themselves back into the dollar. But we'll definitely keep an eye on that. Let's take a look here at some major dates this week in the market, and then we will take a look at the earnings calendar. But first off, let's take a look here and see what's going on this week. Now, Wednesday, we've got durable goods orders month on month, a leading indicator for the market. So that will be interesting to see what's going on with that. And then I think Thursday is going to be a big one here with the GDP growth rate quarter on quarter. That should be an interesting number coming out. We'll see if the market reacts to that. And then we've got some more coming out on Friday, the 26th. We've got income, spending. People like income and people like to spend, last I checked. And we also have the core PCE price index month on month. But yeah, Riz, with this GDP print, what are you thinking on that? Do you think that that will be a big time for the market or more of a nothing burger?
Yeah, I think it should cool off. I think the consensus and the forecast is about 2.5, 2.3% growth rate. But yeah, again, that's the growth rate quarter over quarter for Q1, 2024. So it's the advanced number. Keep in mind, they're usually a number that's the actual release, and then after that, that's maybe the adjustment, right? Because obviously, it's not easy to just total up all these numbers for the entire US economy, right? There's a lot of moving pieces, a lot of stuff. So the data is an advanced data, and then there's the actual print, and then maybe that print may or may not have factored everything in, and then there's that final uh, kind of set in stone number for the GDP. So it'll be interesting to see how it is in Q1, but I don't think it's going to be too bad. It's going to be fine as expected. What's going to be more important, I think, from the market standpoint this week is going to be the earnings.
And that's exactly what we're going to take a look at next. But if you are here in Elite and one of our people here on the I can't talk on the live webinar, please go ahead and start posting your questions for Riz and myself while we go ahead and take a look at the earnings calendar. And we've got some big names reporting this week. Now, I'm going to go out on a limb here and say that Monday is going to be mostly a day we're kind of waiting because the big names are coming out on Tuesday, if you ask me. We've got UPS, GE, Pepsi, if you like that sort of thing. We're starting to get into the defense stocks. Lockheed Martin is reporting. And then everybody's going to be looking at Tesla and Visa after the close on Tuesday. I think those are going to be the big names there for sure. Let's see, Wednesday, more defense coming in. Boeing coming in hot. Not sure about everything going on with Boeing right now. And then we've got Meta after the close, IBM, definitely some big names there. Let's see here on Thursday, Altria, if you fancy that sort of thing. If you're into construction, Caterpillar, definitely one to keep an eye on. Alphabet, ooh, there's one that Riz likes. That one we have played in the past and definitely something that is going to be a big mover of the market, as well as Microsoft, Intel to a lesser extent, more so than it used to be. And then Friday looks like we've got a couple of oil companies. We've got ExxonMobil and Chevron, AbbVie if you're into biotech. And that looks like the big names here this week. Did I miss anything, Riz?
Nope. Yeah, you got for the most part. Yeah, it's really kicking off now, obviously, with Microsoft and Alphabet. And of course, like you said, Tesla on Tuesday, Facebook, Meta on Wednesday after close. Of course, Boeing, aka Flying Coffin, is also Wednesday before open. So that'll be interesting. And apparently, as we mentioned in Elite, they want to have like mini flying coffins now for individuals, hopefully by 2030, especially in the Asian market. So,
Oh,
I mean, they
Lord.
can keep them. They can keep them if they, that's crazy. Like, I don't know. I haven't taken a trip in a while, but I think the next time I take a trip, I'm gonna have to call someone over, maybe get a direct line on the potential pilot, see if they're flying Airbus or Boeing. If it's a Boeing, cancel vacation.
Yeah, right. Man, the stuff going on with Boeing right now, not very confidence inspiring. So I'm gonna go out on a limb, and this, of course, is not financial advice, and I'm not telling you where to put your money, but I'm thinking these earnings are going to come back poorly, or the market will react to them poorly. That's just a guess on my part, though. But I got a question from Nikhil here. Wants to know some exit thoughts on two healthcare stocks that I think we talked about last time. Humana is the first one. Now, of course, I don't know your entry, and you don't have to tell me. But Humana making a very nice recovery here post dividend. Looks like dividend got paid out, or that's the X date if I'm not mistaken. Yeah, the 27th. So dividend got announced and paid, or is scheduled to be paid for delivery, and we've had a very nice recovery there from Humana. So. What are your thoughts on this, Riz? Obviously, we're going into earnings here on the 24th, so that's definitely a big catalyst. I mean, if we got in somewhere down here, I would definitely be looking to maybe take this one off, especially before earnings.
Yeah, we got in. We maybe the trade lasted maybe a couple days. Took a quick meat of the move. And yeah, that was it. It was good, quick trade. The fact that if someone's held, that's fine. But yes, you're right. Coming into earnings, I don't know. There's definitely upside in here. This thing's completely been
Obliterated.
back behind the shed. So I feel like this does have some upside. But of course, we know earnings. Anything goes. It's a coin toss. We don't know what they'll release. We don't know what guidance will be. We don't know how the market will even react. So, a lot of multiple coin flips at the same time. So, for those carrying and with earnings coming up again, just be cautious of that. But yes, for our trade, we got in, out, good profit.
Nice, solid play. Then another healthcare UNH. Again, I think we looked at this one now. That's quite a move there. If I recall, yeah, we were talking about it down here
Yep.
last week, and man, this one absolutely made a move post earnings. That obviously went very well. Man,
Yep.
I would let this go. Look at the tails on these, or the
Yeah.
wicks rather. That's not exactly confidence inspiring, but a massive move, and I would let this one go if you're in.
Yeah, another profitable trade. We got out of this after earnings, and took those gains. And yeah, of course, it kind of continued. Wasn't an easy move because as you can see that crazy, crazy doji, that green candle. There's a
Right
crazy,
there.
super indecisive, right? Even after post earnings, that candle, it was a nice gap up, but it kind of gave back some of the opening gains, right? Hence why the candle was red. But the other three following days, yeah, definitely a very, a lot of relative strength this week on UNH compared to the market dropping significantly. This thing's just pushing upwards, right? But yeah, was another solid trade. If someone's still holding, I would definitely have taken it off already, which we did. But for those holding, kudos. And I think it's a good time to take gains.
Yeah, for sure. And then one last one from Nikhil here asking about our thoughts on Snap. Should we hold or should we exit? This looks like
Garbage.
garbage. Yep.
Garbage. I don't even want to, I don't even need to let you finish your statement there, Chris. Sorry to interrupt. I just trash, just garbage. Nothing to do with this stock.
Let it go. Elsa, that piece of trash. Just let it go. All right, cool. Mickey wants to know about Intel. All right, let's take a look at Intel. Good old Intel. Looks like they're getting absolutely wrecked. One that hasn't been able to ride the AI train craze. Just forget it. Yeah, I mean, honestly, I feel like AMD is kind of outclassing Intel at this point, as far as chipsets are concerned. Now, I'm not somebody who like follows chipsets all the time, but my general feeling is that AMD is kind of winning that battle, whereas Intel used to be the top dog in the field. But man, it just looks like in a straight free fall, and we've got earnings coming up here on Thursday. Man, I wouldn't touch this one if it were me and my money.
Yeah, this definitely quite oversold now in the as you can see with the RSI as well. Like you said, Intel's definitely been kind of the underperformer in the semiconductor space, in the chipset space. So I feel like they've lost a lot of ground. Obviously, the past few years, it's been a mess in terms of management and their products. I feel like this is not something I want to enter. It's yeah, a lot of the semiconductors have also dropped the past week as well. So uh yeah, not something I'd be too thrilled about carrying or even entering at this point.
Yeah, for sure. Nikhil was talking about with the whole Snap thing. He was asking about with the potential for the TikTok ban. I still don't think you're going to see much movement in the stock, even if that happens. That's my opinion. But yeah, I would not touch that with a 10-foot pole if it were my money. Okay, Abhishek said he made it on a Boeing recently. Glory to the Almighty. Amen to that, brother. Glad you made it off alive. Let's take a look here just real quick at Boeing stock. Obviously, they're getting omega wrecked for all of the things going on with their planes right now, as they rightly should, if you ask me. There's no excuse for that. But, going into earnings here, obviously, it looks like we kind of found a floor here right around 167 or so. Perhaps that's, the zero altitude for Boeing right now. And, maybe they're kind of bouncing off the ground. I'm not expecting a whole lot here, but yeah, I'm not too excited. And yeah, it looks like they're expecting negative earnings on here. I would not ride on one, and I don't think I would buy this stock if I had money to distribute myself. What are your thoughts, Riz?
Yeah, sort of a hard deck here around 169, 170, no fly zone below that. Hopefully, I feel like yeah, this is uh not confident inspiring as well. Just even like I feel like for this, even the technicals are out the window. Like, who cares when you have doors flying off, wheels coming off, bolts coming loose? Like, fuck, like Jesus. I want nothing to do with it, just out of principle alone. Like, fuck that. Like, I'm a capitalist, but fuck that.
Riz coming out with the flying puns much better than me. All right. Julian wants to know about AMAT and DHL. All right, let's take a look at AMAT here. Applied materials. This is one that we have traded in the past. Let's see. Looks like we kind of made a nice run post earnings here, at the beginning of the year in February, making a nice push up, but getting absolutely hammered these last couple days, blowing right below that 50 moving average. Riz, what are your thoughts on this? Not really confidence inspiring, kind of similar to Boeing, but obviously not in the same wheelhouse there.
Yeah, no, there's another semiconductor. Obviously, there's a bloodbath. All the majority of semiconductors way overdone. Not surprised this drop. I would say technically, if you really want to take a technical trade on this, they're very bearish, especially if the market continues lower this week. But again, tough to say if there's someone has a position or not. But I'm not touching this. I'm not shorting it either. I feel like we've already done that short trade on Nvidia, which is beautiful. 1 day trade, awesome. Like got in exited profit target to same day done. So I'm not gonna push my luck just yet. Of course, we'll see, how Monday opens, and more closer even tomorrow, how tomorrow Sunday's futures market opens.
Yeah, let's just look at NVIDIA real quick before we take a look at DHL. What a candle right there. Heck of a short call on that one, Riz. Well done. All right, cool. Let's pull up DHL real quick. We want to do some shipping. Looking like shipping is not really in favor right now, but we are kind of holding here around this 38 here.
DHI.
Oh, it's DHI. My bad. My bad.
Uh,
There we go. Okay. DR Horton Incorporated. Okay. Sorry about that. My bad. Glad we got the right ticker there. So yeah, definitely getting kind of pushed down here. It looks like we've talked about this in the past. Made a recovery from that little downtrend here over the last couple of months, but really kind of seeing nothing but red since about the beginning of April. And wow, Thursday and Friday, that was painful. I don't know if I'm going to try and catch the knife on this one. Where are you at, Riz?
yeah, I agree. I believe this is housing. Again, massively overdone over the past couple years, just been running up. Not surprised at all it pulls back. A lot of people that got sucked into the past 2 months of buying equities and getting in because like, oh yeah, train's leaving without me. Well, yeah, you got on the train, it just kind of went off the rails. So, maybe you should have kind of waited for the next one to come. But hey, that's where retail gets slaughtered, right? They run it up, and then they just pull the carpet underneath you. And that's exactly what happened in the past week. Not surprised at all. There's been a reason why I've been about 85 to 90% cash. And of course, just absolutely, if I'm going to toot my own horn, I'm going to say just absolutely demolishing the market right now with the SPX about barely eking out a 5% year to date gain. And I'm at about 17 percent. That too on a 1.8, now 1.9 million US dollar account now.
Well done, sir. Well done. Yeah. So hold off on this one. That's our opinion, but of course, it's your money. You can always do what you want with it. All right. I think this is a great question to close out the webinar from Abhishek saying, what level on the SPX would you think about buying the dip? Now, obviously, we've had a very hard breach of the 5,000 level. Riz, what are your thoughts? I mean, obviously, no one knows where the bottom's going to be.
Yeah.
And none of us, and if anybody tells you they know where it's going to be, you might as well throw the BS flag right away because no one knows where it's going to stop. But, what area in the SPX are you going to start, looking at things with that eye going, maybe it's time to, start putting some starter positions in.
Yeah, I feel like the fact that it broke below 5,000 is definitely something that I want to keep an eye on, not in a rush to start buying the dip, so to speak, because everyone that tried to buy the dip, I get it because it's worked up until now, or up until last week, I should say. Uh, you want to be extra cautious now. Let's see if we can run it down to 49, 4,800. seems a little bit of a far-fetched thing in the next week or two. Otherwise, I think we're going to see like a little bit of a dead cat bounce. It's not going to be a straight line down, obviously, especially once things get in the oversold area, which they're very close to. Uh, for me, it's a moving goalpost because why? Well, we want to get more color from the Fed. We want to see one a little bit more inflation print come in. We want to see is this thing going forward. And what I mean by that is that rate hike, rate cut, most likely 25 basis point happening in June or what? Or is it September now, right? Because there's still that seesaw back and forth, right? Uh, so let's see. I'm not in a rush to start taking peculiar, like specific positions that make sense, long or short, and then that's it. I'm not trying to go in and buy the dip and buy everything, but I'm also not going out there and shorting everything all at once either, right? So it's about being strategic, looking at individual stocks, being selective, understanding, well, what's the beta? How much is this going to move? If the market moves down 1%, how much is this going to move? Generally speaking, if the market moves up 1%, recovers a little bit. So, uh, that's again in a nutshell. Obviously, easy said than done, but yeah, taking it day by day. I'm not thinking from like a dip buy list. For those of you that are an elite that have been there with us for a couple of years or a few years, know about the infamous dip buy list. I don't think it's time for that yet. I know someone did ask me. I think it's a little bit premature and early for now. Let's see if we can get 4,900 area. Um, to quick little assessment here, Chris, where are we from all-time highs if you use the ruler function to see from all-time highs to now, how big is this drawdown?
Yeah, let's take a look at that. That's pretty close. So yeah,
6%? Five and a half?
right around 5.5%, maybe a little more.
Yeah, that's not bad, like that's not bad, but it's definitely painful for those that just full poured it in
Uh-huh.
near 5,100, 5,200. But for those that got in around 5,000 are kind of feeling the pinch, having seen their gains kind of wiped out because like I said on Friday, the market pretty much took out 2 months worth of gains. If you think about it, we're right back around February. Right. So, interesting indeed. So there's probably quite a few people trapped there.
Yep.
Maybe they start taking things off. Maybe there's some funds looking to close things out as we get into um, May and summer, right? So it's interesting. A lot of moving parts that I'm kind of keeping an eye on. But if this thing goes lower, I'm all for it. I know for people, for their 401ks, for their, retirement accounts. Um, Maybe they have some long positions. They wouldn't be thrilled, of course, right? I understand. But for me, personally, I feel like where I'm at, the 15% exposure that I have to long positions, I'm okay if they go a little bit lower, that's fine. Of course, being 85% cash is sizable. I have a lot of dry powder, so to speak. And for moments just like these, so I can't say yet, in short. Can't say exactly where we see that kind of market hold up.
Yeah, I think it's really kind of one of those day by day things like you talked about because it's very hard to time the market. I mean, if that were the case, we would have timed it right down here at the end of October and just been like, all hands on deck, let it all go. But hindsight is 2020 when it comes to something like that. It's hard to know for certain in the time if we're really going to see a push like we did. But yeah, obviously these pullbacks are, not unexpected. They are healthy. It's part of the market. You can't buy low and sell high if you don't have some pullback now and then. You just can't go up and up and up forever. And I think that's something that we all need to remember. Going into a 5%, 5.5% drop like this, it's normal. It should happen, especially with all of the pricing in of rate cuts like we've been talking about. All right. Well, I want to thank all of our members here for coming out to the live webinar. Thank you for all the live questions here on the chat. You guys are awesome. If you are watching on YouTube or watching the replay and you haven't done so, do me a solid, leave us a like and a subscribe on the way out, and we'll see you in the market on Monday.